Your Dinar Daily Update begins now. Imagine a scene that, until recently, felt like pure fantasy. Walking into your familiar local bank branch in the United States, presenting a stack of Iraqi dinars you've held on to for years, and leaving shortly after with cash in your hand. This entire process remarkably unfolds without the need for a single pre-scheduled appointment or a cumbersome series of preliminary phone calls. Today in 2025, this isn't a speculative dream or a futuristic scenario, it is an active, real-time service that is quietly being adopted by a growing number of financial institutions across the nation. This significant shift is rapidly changing the practical realities for everyone holding the Iraqi currency, bringing an unprecedented level of accessibility to the market. The news of this development is spreading quickly through communities and online forums dedicated to foreign currency. For years, individuals with dinar holdings faced considerable difficulties when they sought to liquidate their currency, often finding themselves struggling to locate willing buyers or being forced into transactions with specialized, sometimes less than ideal, online dealers. Now, however, people are sharing exciting reports of immediate and straightforward results right at their neighborhood bank. This represents more than just a minor convenience. It signifies a profound transformation in how major financial institutions are electing to handle this specific foreign currency, streamlining a process that was previously fraught with hurdles. The efficiency being reported by customers is striking. Accounts detail experiences where the complete exchange of dinars for US dollars is finalized, and cash is dispensed within a matter of minutes. In other instances where a deposit is preferred, the funds are credited to the customer's account within just a few hours of the transaction. This swift and smooth integration of dinar exchanges into standard banking operations is generating considerable excitement and, importantly, sparking widespread curiosity. For many observers, this move by the banks is interpreted as a potential signal of something much larger taking place, a recognition of forthcoming or anticipated changes within the global currency markets that could carry widespread long-term implications for the dinar's valuation. Banks, as a rule, do not undertake the expense and logistical complexity of establishing specialized currency exchange systems on a whim, training frontline tellers to recognize and handle a unique currency, modifying complex computer systems to process transactions accurately, and navigating the necessary compliance and security authorizations. All represent substantial investments of both time and money. The collective decision by multiple major U.S. financial institutions to now embrace and facilitate walk-in Iraqi dinar exchanges is a powerful indicator of a distinct shift in their institutional expectations regarding the currency's near future role and demand. Reports from individuals across numerous states are providing compelling, first-hand evidence of the process's surprising smoothness and speed. These accounts consistently describe people walking into a bank with stacks of dinars, currency they may have acquired and held onto for many years, sometimes even decades, and leaving almost immediately with the equivalent value in US dollars. Although the precise exchange rates are subject to variation depending on the specific bank and its internal policies, the broader trend is unmistakable and undeniable. A significant portion of the banking sector is now fully equipped to process this currency on demand, requiring no prior booking or special arrangement for the large number of people who have been patiently holding on to their dinar investment, waiting for what they considered to be the right moment to take action. This widespread acceptance opens a completely new and convenient door. It's an unusual and frankly remarkable development within the traditionally conservative financial world. Many industry observers and experts are suggesting that this preparedness may be directly linked to a rising anticipation of broader changes in the Iraqi dinar's international valuation, a strategic positioning by the banks themselves to be ready for potential market evolution. The anecdotal evidence from real customers powerfully illustrates this new reality. Consider the widely reported experience of Sarah from Texas last Tuesday. She visited her local bank branch carrying approximately 500,000 Iraqi dinars. She had held this currency for over 2 years, all the while dealing with uncertainty about the most secure and efficient way to exchange it. When she approached the teller, she was met not with confusion or redirection, but with immediate and trained assistance. Within a mere 30 minutes, the entire exchange process was finalized, and she departed with cash in hand. This straightforward transaction stands in dramatic contrast to the previous, cumbersome norm where individuals were typically relegated to the domain of specialized currency shops or the often risky world of online currency dealers. The newfound simplicity of the exchange process is genuinely remarkable. Another case involves Michael from Florida, who decided to test the waters by visiting 3 distinct bank branches in his area. He reported that 2 of the banks accepted his dinar immediately upon his walk-in, processing the transaction on the spot. The 3rd bank, while requiring a slightly longer delay, still successfully processed his exchange request within the very same business day. These tangible, real-life examples vividly illustrate a clear, evolving trend. Banks are not only prepared for dinar exchanges logistically but are also executing them with speed and a high degree of efficiency, showcasing a newly implemented institutional capability. This raises an important and central question. What accounts for this sudden, widespread preparation by the banking sector? To fully grasp the underlying motivation, one must look at the historical patterns observed in nations that have successfully navigated periods of severe currency instability. It is a recurring economic theme that, following periods of significant economic upheaval, national currencies often begin a process of regaining strength as their underlying economies stabilize and rebuild. Banks, as keen observers of global trends, would certainly be factoring these historical precedents into their current operational decisions. Historical examples that inform this perspective include the experience of Kuwait following the conclusion of the Gulf War, the economic restructuring of Germany after the devastation of World War II, and the transition of Vietnam during the late 20th century. In each of these diverse historical instances, those individuals who had the foresight or patience to hold on to the national currency during its most unstable and uncertain periods ultimately realized extraordinary financial benefits once global confidence and economic activity returned. Observing these powerful historical patterns, banks may strategically anticipate similar positive opportunities emerging with respect to the Iraqi dinar, and are preparing accordingly. By proactively training tellers, updating their systems, and securing the necessary compliance protocols for immediate walk-in exchanges, banks are positioning themselves to respond instantly to any sudden or substantial shifts in the dinar's value or any corresponding surge in customer demand. This decision is certainly an unusual one within the staid world of retail banking, but it appears to be a highly strategic move. It strongly suggests that these major financial institutions are closely monitoring ongoing developments within Iraq and are actively readying themselves for any potential significant financial event involving the dinar. The post-war experience of Kuwait offers a particularly instructive parallel. Following the Gulf War in 1991, the Kuwaiti dinar's value was severely depressed, and the nation's entire economy was in profound disarray. However, the citizens who maintained possession of their currency throughout the years of uncertainty were eventually rewarded when international confidence returned, spurred in large part by the resurgence of oil production. Reports from that period suggest that the Kuwaiti dinar's value saw an appreciation of well over 3,000%, a staggering gain that transformed a relatively small initial investment into a life-changing sum of money over time. Observers of the Iraqi dinar are drawing clear parallels to the Kuwaiti scenario, especially when considering Iraq's immense oil reserves and the ongoing, large-scale efforts dedicated to infrastructure rebuilding. The thinking suggests that if Iraq is able to achieve a similar degree of comprehensive economic stabilization and regain international confidence, those currently holding dinars could potentially experience substantial financial benefits. While the specific political and economic circumstances of Iraq are undeniably unique, the historical examples powerfully demonstrate that significant currency revaluation is certainly possible. And the fact that banks are preparing for these exchanges may well be an institutional signal of their own future expectations. Germany provides another compelling historical illustration. After the conclusion of World War II, the newly introduced Deutschmark was implemented to replace the old, widely distrusted currency. Initially, the public was hesitant to fully embrace it, often preferring to barter or rely on tangible goods over currency for transactions. However, as Germany steadily rebuilt its industrial and economic base, the Deutschmark progressively gained strength, eventually establishing itself as one of the most stable and respected currencies globally by the 1960s and 1970s. Early holders of the currency saw extraordinary increases in value, reinforcing the essential lesson that robust economic recovery can dramatically enhance a currency's inherent worth. Looking back at these significant historical, economic events provides a clear and contextual framework for understanding why major U.S. banks are currently undertaking the expense and effort of training staff and setting up specialized systems for Iraqi Dinar exchanges. While every country's journey is singular, banks frequently adopt a proactive stance, moving ahead of the curve to ensure they possess the necessary infrastructure to meet a possible surge in demand, should a favorable opportunity arise. This seemingly routine banking update is, therefore, a subtle but deeply significant demonstration of institutional foresight and preparation for potential market developments. The experience of Vietnam during the 1980s and 90s further highlights the potential for investors who hold on to a currency throughout an economic turnaround. At that time, the Vietnamese dong was exceptionally weak, characterized by soaring inflation and a highly unstable economy. As the country gradually opened its borders to international trade and foreign direct investment began to pour in, the dong slowly but surely began to appreciate in value. Although the gains were not on the same dramatic scale as those seen in Kuwait, they were still materially significant for those who had invested during the early, uncertain stages of the country's economic shift. Applying these historical insights to the situation in Iraq reveals striking parallels. Iraq is presently engaged in a gradual but determined process of attracting international investment, rebuilding its vital infrastructure and striving to stabilize its economy following decades of conflict and instability. The banks that are now dedicating resources to prepare for walk-in dinar exchanges are, in essence, institutionally acknowledging these evolving economic developments. Their actions subtly suggest that they are anticipating a future period marked by increased financial activity and, quite possibly, a major currency revaluation event. The current environment within U.S. banks regarding the Iraqi dinar is truly unprecedented in its accessibility. It is no longer a requirement to schedule a specialized meeting days in advance or endure weeks of uncertainty, simply to access exchange services for the dinar. Customers are consistently reporting that they receive immediate assistance upon walking in, which strongly suggests that banks have successfully implemented highly efficient and secure verification and transaction processes. Establishing this capability demands not only thorough staff training but also the integration of sophisticated software systems to ensure complete accuracy and strict compliance with financial regulations. Banks do not commit to this level of resource preparation lightly. Significant time and resources are required to ensure that frontline tellers can reliably identify genuine diners, accurately validate the amounts, and complete the exchange efficiently and securely. The fact that these comprehensive systems are now operational across multiple locations indicates a strong institutional belief that there is a tangible business value in being fully prepared to serve the large number of customers holding diners. This widespread development is opening up practical and accessible opportunities that simply did not exist even a few short months ago for dinar holders. It is important to maintain a nuanced perspective. Not every single bank branch currently accepts the Iraqi dinar for exchange. Individuals seeking to liquidate their currency may still need to contact or visit several different branches to find one that offers the service. However, the emerging trend is one of steady expansion, with more institutions reportedly joining this movement on a weekly basis, gradually increasing the overall accessibility. The standard identification requirements for these transactions are typical. Usually a valid driver's license or passport is required, and the bank will perform essential checks to verify the authenticity of the dinars being presented for exchange. Customers should also be aware that the specific exchange rates offered can and do vary between different banks, and there may be predetermined limits on the maximum amount that can be exchanged within a single transaction. For individuals holding exceptionally large amounts of dinars, this may necessitate multiple visits or staggered exchanges over a period of time. This systematic approach allows the banks to effectively manage their internal cash flow and adhere to all necessary compliance requirements, while still successfully offering this highly desired service to customers who have been waiting for years for a straightforward and accessible exchange option. Many individuals are obviously intrigued by the potential for the Iraqi dinar to dramatically increase in value. While the historical examples cited certainly offer a basis for optimism, it is fundamentally important to understand that global currency markets are inherently complex, volatile, and highly unpredictable. Political stability within Iraq, its rate of economic growth, international relations, and broader global market trends all exert significant influence over exchange rates. The mere fact that banks are accepting walk-in exchanges, while significant, does not by itself guarantee that the dinar will experience a dramatic appreciation in value. Nevertheless, the very existence of these new, accessible exchange services sends a clear signal that the financial sector is actively preparing for potential future developments. Financial experts consistently emphasize that remaining thoroughly informed is absolutely key in this unique environment. Early preparation and a clear understanding of the situation allow individuals to make well-thought-out decisions. Whether they choose to exchange a portion of their dinars now or decide to continue holding them in anticipation of a potential future revaluation. Proactively monitoring news related to Iraq's political and economic trajectory is essential for all dinar holders. Key indicators of potential value changes include reports on international investment inflows, updates on oil production figures, the progress of major infrastructure projects, and any official government announcements concerning currency reforms. Having the newly available option to exchange dinars at a local bank, without the previous requirement for prior appointments, provides holders with a crucial degree of flexibility and enhanced control over their holdings. They are no longer solely dependent on the often limited options of online platforms or specialized niche currency shops. By being proactive and staying knowledgeable about these institutional and economic developments, holders are empowered to act quickly and decisively when opportunities present themselves, rather than being caught unprepared. For individuals who do not currently hold dinars but are contemplating an investment, a strong sense of caution is critically important. Currency speculation is a high-risk endeavor that can result in significant losses just as easily as it can yield gains. The standard advice remains: only invest what you are in a financial position to afford to lose completely. Thoroughly educating oneself about Iraq's economic fundamentals, reviewing historical currency patterns, and understanding the current bank policies is essential groundwork before committing to any investment decision. While the possibility of a significant currency revaluation exists and is the subject of much discussion, there are absolutely no guarantees. The core challenge for any investor is to achieve a balanced approach, tempering optimism with informed, data-driven decision-making, fully understanding both the inherent risks and the potential rewards, and being prepared to act strategically if the situation develops favorably. What makes the current setup in U.S. banks particularly noteworthy is the sheer speed and simplicity of the new process. Customers are consistently reporting that transactions are often finalized in minutes, and deposited funds are sometimes credited to their accounts on the very same day. This level of convenience represents a monumental improvement over previous years, when exchanging diners could be a weeks-long ordeal filled with uncertainty and logistical challenges. The fact that multiple banks are implementing this efficient system simultaneously strongly suggests a coordinated approach and indicates institutional confidence in the newly established processes. For individuals who have patiently held onto their diners for many years, this new system represents not only a greater financial opportunity, but also a secure and immediate pathway to accessing liquidity, without the typical bureaucratic delays historically associated with foreign currency transactions. Banks implementing walk-in dinar exchanges are communicating more than just a commitment to customer convenience. They are strategically signaling their institutional readiness for significant potential market shifts and increased customer demand, demonstrating a notable degree of institutional foresight in positioning for potential revaluation scenarios. As the accessibility for walk-in dinar exchanges continues to grow, exercising prudence remains essential. Remember that exchange rates are subject to variation between banks, and positive financial outcomes are never guaranteed in currency markets. Understanding the complete process, knowing the exact identification requirements, and being aware of any potential transaction limits is vital for anyone planning to utilize this new service. Being well-informed and thoroughly prepared allows individuals to maximize their flexibility, whether they choose to exchange smaller amounts initially or stagger larger sums over time. Historical market performance consistently shows that early preparation and strategic timing often correlate with favorable outcomes in currency markets. The broader context strongly suggests that Iraq is moving, albeit gradually but surely, towards a greater degree of economic stabilization. The presence of massive oil reserves, continued infrastructure rebuilding efforts, and sustained international investment all point toward a substantial long-term growth potential. Banks accepting walk-in exchanges may be strategically positioning themselves to readily facilitate immediate customer needs. Precisely when these expected changes begin to materialize, while the historical parallels with Kuwait, Germany, and Vietnam offer valuable context, it is crucial to remember that every national situation is unique, and there is no certainty that Iraq will follow the exact same path. Nonetheless, these current banking developments are significant enough to warrant careful attention from anyone with an interest in foreign currency investments. For dinar holders, the core message is clear: maintain vigilance. Stay thoroughly informed, understand all available options, and base decisions on verifiable facts, not on speculation or emotion. The simple ability to exchange diners at a bank without a prior appointment provides an invaluable combination of convenience and flexibility. It empowers holders to respond swiftly to new economic developments in Iraq or to sudden shifts in global market conditions. Continuous monitoring of local bank policies, international news concerning Iraq, and broader currency trends is the key to making educated and timely decisions. By remaining vigilant and fully prepared, you can strategically position yourself to take advantage of opportunities as they emerge, while simultaneously minimizing the inherent risks associated with currency speculation in a volatile market. In this new and evolving environment, information truly is power. A knowledge of the current processes and economic landscape is the most valuable tool available for anyone considering exchanging or holding Iraqi dinars. In summary, the landscape for Iraqi dinar exchanges has fundamentally changed in 2025. Walk-in services at U.S. banks are now a confirmed reality, offering immediate, convenient access to cash. Historical precedents from various countries illustrate the substantial potential for currency appreciation following periods of instability. Iraq is exhibiting clear early signs of economic recovery and stabilization. While currency markets remain inherently unpredictable, the fact that major banks are preparing for walk-in exchanges is a strong institutional signal anticipating meaningful developments. The essential takeaway for all stakeholders is to remain informed, maintain flexibility and strategy, and base all decisions on factual analysis rather than emotional impulse. These changes represent an accessible and secure opportunity that deserves close attention in the coming months.